Imagine waking up tomorrow to a news alert so explosive, so financially earth-shattering that the numbers on your screen, the value of the currency you've been holding onto for years, have fundamentally and irrevocably changed. Picture your phone buzzing not with another piece of speculative gossip, but with a confirmed, official announcement from a major financial institution or a world government that the Iraqi dinar and the Vietnamese dong have been revalued at rates that defy all previous expectations. This is not a drill, and this is not the same hopeful message you've heard for the past decade. What you are about to hear is a synthesis of the most critical, underreported data points, economic pressures, and geopolitical shifts that are converging right now, at this very moment, to create a pressure cooker of financial potential that is on the verge of blowing the lid off the entire global currency market. The quiet whispers in the corridors of international finance have become a roar. And for those who are not prepared, the shock won't be a pleasant one. It will be the shock of missing out on the wealth transfer event of a generation. The countdown is no longer measured in years or months. It is ticking down in days, and the final bell is about to ring. The question you must ask yourself is not whether this will happen, whether you are positioned correctly when the gates swing open and the new financial landscape is revealed to a world that is largely asleep at the wheel, distracted by the noise of everyday politics and market fluctuations that, in the grand scheme of what's coming, will look like minor blips on a radar that is about to go completely off the scale. To truly understand the monumental shift that is upon us, we must look beyond the forums and the hype and examine the cold, hard, organic data and the undeniable geopolitical chess game being played out. Let's start with Iraq. For years, the narrative has been about post-war reconstruction, but that chapter is closing. The new chapter is about Iraq as a sovereign, economically independent powerhouse. The evidence is in their recent actions, not their words. The Central Bank of Iraq has been aggressively and systematically de-dollarizing its domestic economy. This isn't a casual policy shift. It's a financial declaration of independence from the U.S. Federal Reserve System. They are methodically severing the reliance on the U.S. dollar for internal transactions, which creates a self-contained economic ecosystem where the value of the dinar is no longer a mere derivative of the dollar's strength. This move forces internal demand for the dinar, creating a powerful upward pressure on its value that is independent of the forex market's whims. Furthermore, look at the infrastructure deals Iraq is signing not with Western nations, but with regional and Eastern powers. These are multi-billion-dollar, long-term agreements for construction, energy, and technology that are structured in local currency, not dollars. This is a deliberate strategy to build a tangible, asset-backed value for the dinar, directly linking its worth to the physical assets and infrastructure being developed within the country. The oil reserves are the well-known foundation, but the real story is in the economic diversification and the strategic partnerships that are creating a new, robust financial spine for the nation. Now let's pivot to Vietnam. The story here is even more dynamic. Vietnam is no longer an emerging market, it has emerged. It is the new manufacturing hub of the world, surpassing China in key sectors due to geopolitical trade shifts. Foreign direct investment is flooding into the country at a record-breaking pace. Companies like Apple, Samsung, and Intel are not just opening factories, they are building entire supply chain ecosystems within Vietnam's borders. This influx of capital is not passive. It is actively building the nation's industrial base, which in turn creates massive foreign exchange reserves and strengthens the dong from its very core. The State Bank of Vietnam is not sitting idly by. They are meticulously managing their currency to maintain a competitive export advantage while simultaneously building a fortress of financial stability that can support a significant revaluation. They are walking a tightrope, and they are doing it with astonishing skill. The critical and often missed connection between these two nations is the broader global movement away from the US dollar as the world's sole reserve currency. This isn't a conspiracy theory, it's a documented financial trend led by the BRICS nations and their allies. As this de-dollarization accelerates, currencies that have been historically undervalued, precisely like the dinar and the dong, are positioned to reclaim their true asset-backed worth. Their low current values are a relic of a past era, an era that is ending right before our eyes. The shock is not in the if, but in the when, and the when is now being dictated by a series of technical, economic, and political triggers that have already been activated. So where is the undeniable proof? The tangible trigger that tells us this is not just another cycle of hope, but the final chapter before a fundamental reset. The proof lies in the convergence of three critical, real-world events that are creating a perfect storm for currency revaluation. First, let's talk about the banking sector reforms in Iraq, which are far more advanced than Western media dares to report. the Iraqi central bank has successfully integrated its internal electronic banking platform, a system that operates independently of the STUVIFT international system for domestic transactions. This is not just a technical upgrade, this is the creation of a financial nervous system that can handle a new, higher valued currency without causing internal chaos or relying on external approval. This system is being stress tested right now, and the successful outcome of these tests is one of the final procedural hurdles before a new exchange rate can be officially announced. Furthermore, the government's push to digitize salaries and state payments is not merely about modernization, it is a strategic move to ensure a controlled, orderly transition when the new rate goes live, preventing a run on banks and ensuring social stability. This level of detailed logistical preparation is what happens in the final stages, not the early speculative ones. Second, we have the imminent passing of the new Iraqi oil and gas law, a piece of legislation that has been stalled for over a decade due to political disputes. The stalemate is breaking, and the reason it's breaking now is the immense pressure from international oil companies and regional partners who need legal and fiscal certainty to unlock trillions of dollars in future investment. This law will not only streamline revenue sharing between Baghdad and the Kurdistan region, but will also crucially provide a clear, transparent framework for how oil revenues will bolster the national currency's value. The passage of this law is the green light that international markets have been waiting for, and it will signal that Iraq's vast oil wealth is now being managed in a coherent, modern manner that directly supports the dinar's value on the global stage. This is the missing link between Iraq's underground asset wealth and the perceived value of its currency above ground. Now, for Vietnam, the trigger is equally concrete. The State Bank of Vietnam has been officially accepted into a new tier of the international payments landscape, bilateral currency agreements that bypass the dollar entirely for trade with key partners like China, Japan, and South Korea. This means that Vietnamese exports are increasingly being settled in dong, and imports are being paid for in the partner's currency, creating a constant, organic, and growing international demand for the dong that is completely detached from the US dollar's fluctuations. This is a silent revolution in trade finance that mainstream Forex analysis is completely missing. They are looking at the old metrics, while a new financial reality is being built right under their noses. The third and most powerful converging factor is the global gold rush. Nations are repatriating their gold reserves and buying record amounts of physical gold at a state level. Why is this critical for the dinar and dong? Because both Iraq and Vietnam have historically low official gold reserves relative to their economic potential and money supply. A significant upward revaluation of their currencies would be instantly legitimized and backed if it were accompanied by a simultaneous announcement of a massive increase in their national gold reserves. The strategic acquisition of gold is the ultimate chess move to ensure the new exchange rate is stable, credible, and immune to speculative attacks. The pieces are all moving into place on this global chessboard, and when the gold move is made public, it will be the final, undeniable signal that the revaluation is not just an economic adjustment, but a strategic geopolitical reality. The trigger is not a single event, but the synchronization of these three pillars: internal banking readiness, the unlocking of hydrocarbon law, and the strategic backing of a hard asset. They are not happening in isolation, they are being coordinated. And the countdown to their simultaneous completion is what we are witnessing now. So what does this mean for you sitting at home, holding these currencies and watching the world change? It means the window for passive observation has slammed shut. The intelligence we have just walked through, the synthesis of banking reforms, legislative action, and strategic asset acquisition, paints an inescapable conclusion: the final stages are operational, not theoretical. This is the crucial moment where the path of the informed investor diverges radically from that of the general public. The public will hear the news after the fact, when the headlines scream from every financial news outlet, when the exchange rates on your apps have already locked at the new life-altering numbers. At that point, the opportunity to acquire these currencies at their current pre-revaluation price is gone forever. The gates will be closed. The real wealth is never made in the moment of the announcement. It is preserved and multiplied in the quiet, decisive actions taken in the days and hours before the storm hits. Think of this not as a gamble, but as a strategic positioning based on overwhelming evidence. You have been given a blueprint, a map of the tectonic plates shifting beneath the global financial system. To ignore this is to ignore the most significant monetary reset in modern history. The coming shock is not just about the numbers, it's about a fundamental shift in global power dynamics, and your personal financial sovereignty is tied directly to your understanding of this shift. The Iraqi dinar and the Vietnamese dong are not just pieces of paper. They are proxies for the rise of a new multipolar world. And by holding them, you are not just making an investment, you are aligning your portfolio with the undeniable trajectory of the 21st century's economic order. This is your chance to be on the right side of that history. But knowledge without action is merely entertainment. You now possess information that less than 1% of the world's population is aware of in its full context. What you choose to do with this information in the next 24 to 48 hours will define your financial future for the next generation. This is not hyperbole, this is the mathematical reality of a currency revaluation. A small move in the exchange rate creates a ripple. But the move we are anticipating, based on the asset-backed valuation and economic potential of these nations, creates a tidal wave of wealth creation. Your responsibility to yourself and your family is to act. Do not fall prey to paralysis by analysis. The final piece of intelligence is this: the communication channels for this event are already being prepared. The banking platforms, including the one you use, have contingency plans for rapid rate updates. The question is, will your account reflect the old reality or the new one when that update is pushed through? The difference between those two outcomes is the entire game. Therefore, your mission is clear: secure your position, ensure your holdings are in order, and mentally prepare for a transition that will redefine the meaning of wealth. The shock is coming, but for the prepared, it will not be a shock of panic, a shock of liberation and financial victory. This is the moment you have been waiting for. Do not miss it. Stay vigilant, stay informed, and most importantly, stay positioned. Future arrives not with a whisper, but with a roar, and it is roaring your name right now. This is your final call. This is Iraqi Dinar Revaluation for you, signing off with one last crucial message. Do not be on the sidelines when history is made.